All right. Hello everybody. This is a video just for the members. All right. So this is just for the members. So I want to make a few things clear because I've set up some really nice new stuff for you in the members area. And let's first of all start with that so we can plan ahead. Now the first thing is, let's first do this. When you log in, right, you log in and obviously you're going to come to your courses area. In the courses area, if you're just a monthly member, you have access to the search portal. If you're a quarterly member, you'll have access to both of them. I just want to go into the research portal first and give you a heads up. Now it says start here, and this is exactly where you should start, and just read through that and see how it all sits in. I've also added here a download 5-step checklist. Now this is an HTML setup. I've put it in a zip folder, so you'll download it as a zip folder, but when you unzip it and you bring it on and you double click, it'll open on your browser. It will work online, offline. It's just HTML. All right, and when it does open, this is what you're going to see, the 5-step protocol. All right, so the 5-step protocol for us is going to be time plus price plus risk in order every trade. So this is going to allow us to set up our trades. Okay, so we'll have a 5-step protocol, 5 easy steps. The reason I keep everything a maximum 5 steps is beyond 5 people start to get confused, but if we keep things like 1 to 5 nice and clear, it'll be fine, and more than a handful always goes to waste, so just 5 steps is good. And this is going to be the protocol. So what you need to do, okay, you don't have to obviously, right, but I'm just trying to make your life easier according to trading with time and price. What you can do is, first of all, put your account balance here. As you can see, these are all defaults. Okay, as you know, we have grade A, grade B, grade C trades, which are on the Cycle Edge software, which I'm going to come to in a minute. You can see here grade A, grade B. Down the line, we're probably going to have grade C somewhere. No, these are all grade A and B. Okay, fair enough, but there will be grade C as well. So according to the grade, you can increase your risk level, but I always say your risk level is if you can go to bed comfortably. All right, so if you're going to risk anything, even if it's 1%, but you can't get right sleep because that 1% is a big deal for you, then obviously go for 0.5. Okay, so we're going to have just 5 steps for doing most things. First thing, technical analysis. All right, just do your technical analysis first. Read the calendar, see what's going on in the members area, right? So you have to go into the members area and see what's going on. So for example, today is Sunday, right? You should be already looking at 15th to 19th of January to see what's going on next week. The hours, the days, if there's going to be, I don't know, some gain day, drain day, whatever. All right, you should check out the hours. Why is that important? Because you can plan out your whole week before the week starts. Normally, what do people do? Markets open, and before the markets open, they're in front of the screen. Okay, not a very great way to live. All right, so you're going to be sacrificing your health trying to make money in the markets. Really not a good idea. So where was I? So that's the first thing, right? Doing your technical analysis, you read the calendar. I'm going to go over them one by one. Let's just take a look at it in general. Build the plan. All right, you're going to have a trade plan, and then you're going to trade the plan, right? Execute it, and then you're going to log it. Now this is important, and a lot of people run away from this. Don't. Okay, this is going to help you sharpen yourself with time and price. You're going to say, oh, okay, I took a grade C trade and I put too much risk on it and it turned poo-poo. All right, so you don't want to be doing that. So you want to check how you're trading. And the minute you start to get stats on how you're trading because you logged it, right, then it's going to be like, good. Now here, there's a copy summary here. Once you've done this, you can copy that and you can put that onto a trade journal, right? So Everything is nice and easy. Okay, so really easy. All you got to do is tick the boxes and fill out a few boxes. So let's go over it together. So if you have a 100k account, then it's 100k obviously. If you're going to trade, you know, a grade A, so you're going to take 2%. Okay, so accordingly, your dollar amount, your risk percentage amount, it's all going to be there. And then you're going to come into higher time frame, daily, 4 hour, up, down, or range. So let's take a look at Bitcoin. Now with Bitcoin, I'm going to do an example with Bitcoin. So I want to stay on top of Bitcoin for a while. And I will tell you why later on, because when the time comes, we are going to be like really getting into Bitcoin. All right. So I'm going to take it from the beginning of the year, January 1. Why? And I will explain in a second. January 1. Let's come to January 1. That's your January 1. Okay. And let's go here. I'm going to explain that in a minute. So once you check out your higher time frame, you mark your key levels. Okay, just like we always do, right? Rectangles, support, resistance. Check out your zone and leave it. Your chart does not need to be clustered. See how my chart is? I only have a few lines, support, resistance, and my arrows telling me, do I want to go up or down, right? And then current structure, right? Higher highs and higher lows. Is there a trend going up or down, or are we ranging? Nearest untested levels, you know, I always identify them with the rectangles, as you know. So just draw your rectangles, stick them on there. And also any gaps. You'll see in many of my analyses, I'll put a cause and consequence bar and then check if there's a gap underneath it. If there is a gap underneath it, you know that gap is the target. So I won't be trading the red, but I will be trading, for example, the gap. Okay, so note all those down. Make your notes, right? Just put a few sentences down. Don't write anything long. Just be short and sweet so you don't get confused. Then pull out the cycle edge or ATA timing report. So you're going to be here somewhere. All right, this is where you're going to be, your timing report here. This is where you'll have all the days and the hours and so on. But because I'm going to add asset specific, the cycle edge, you are going to see, for Bitcoin, for example, you're going to see these. All right, you're going to see 2 weeks or 1 week. Okay, maybe I'll just add it week by week. All right, these. So this is going to be this full week up to here. Right now, what does it tell you? This is important for you to understand. This is a report for crypto, Bitcoin, as you can see. From the 1st of January, the reason I took 1st of January is because we're going to see how we're going to use this, right? Until the 26th of June, right? In the members area, obviously, you won't be seeing all the January stuff because I'm just going to put the week. But this video is specifically for all the members, so you guys know how to use this, right? Now then, it will tell you what days to look out for. If it's a red day, it's a good day. All right, so red doesn't mean bad. It means, you know, definitely you don't want to be missing that because it's got high percentage of winning. As you can see here, it's 84.6%. For the orange, I've got 22 days. If it's in that week, you will see it. All right, yellow and apex signals. Now, if I take 1 week, you might not see any of these. All right, they might not happen in a week, but if they do happen, you'll see them. They'll also be here as well. You'll have a color code here as well, right? So if it's it'll tell you, see yellow tier only. It'll be like a, you know, it'll tell you, all right, quiet day. It'll give you a heads up, right? Standard timing day, and so on. All right. So once it gives you the apex signal days or whatever, it's going to give you the dates, right? January 6, 7, 15. All right, so already those are going to be on your radar. Okay, once they're on your radar, then you're going to put them in your notebook, right? You're going to say, okay, 6th of January, 7th of January, and 15th of January. I'm going to be looking out for these days. The other thing is in the weekly, before you look at the daily, look at the weekly, right? So, for example, for next week, we're going to look at the weekly of next week, right? 15th of June onwards. So, macro event this week. It's going to give you a macro event. It's going to give you any day which you might want to look out for. It says Friday, January 2, cycle phase transition. See, it's going to give you a sign there. So make a note of it. These reports are short and sweet. They're not full of words and fluff. If it's on there, it means you need to read it. Okay, sometimes people give newsletters and it's a one, long stuff, all fluffy and airy-fairy. We don't want to be like that. Airy-fairy is not good. For us, we want clear dates, clear hours, and clear direction. All right, without those, you can't trade. Okay, so this thing is all minimal already. Okay, so check it out. Then we've got trend analysis here. One other thing. Let's first of all go one by one. Okay, this is a good example. Let's read, right? It says a cycle phase shift. Okay, so we're going to shift. When? On Friday, January the 2nd. Okay. Cycle phase transition. Phase window, January 2nd to January 22nd. And we're going to have 3 to 5 days. Expect a regime shift in market character. Trend acceleration or trend reset is likely as the new phase develops. Action. Reevaluate long-term thesis. Mark window for sector repositioning. Now look, this window is sector repositioning. Okay. And this is going to trigger off in 3 to 5 days. So this should give me a direction. All right. It's a cycle phase transition on the 2nd of January. And this thing is likely to muck around, okay, until the 22nd. And that initial 3 to 5 days is going to give me some kind of a hint as to what's going on. But I need to expect a regime shift in market character in this time period. All right, so that's heads up. All right, so let's take a look at the trend analysis. Now remember, this is the weekly insight. That gave us a bit of a macro projection, right? Because it says macro events this week. But we're going to be using this as a weekly insight. Trend analysis. The week's highest ways count is 8-way. All right. A standard signal environment. Valid timing windows are present but without extreme density days. Focus on grade A intraday signals as your primary execution triggers this week. Okay. Energy this week is mixed. False breakouts and whipsaw moves are elevated risks. Reduce size on breakout attempts and use grade A intraday signals to identify range extremes. All right, so look out for breakouts and look out for fake breakouts. Okay, so that's the thing. Now, key pivot timing. The most significant window this week is Friday, January the 2nd. It's an 8-way peak. Mark this date, all right? So I want to mark 2nd of January. So if I open it up and if I'm seeing this, I want to be looking in my book and thinking, all right, so in my notebook, Friday, 2nd of January is important, all right? Mark this date. The cycle engine gives you the when. Price structure gives you which direction. Do not pre-anticipate direction. Confirm with price action. Obviously. Why is that a reminder? Because some of you go nuts sometimes and start trading just on time. And I've warned you time and time again, that's not what we're doing. We're doing time and price. If the market is at a good spot to buy on the 2nd of January, if it's at a support, if it's at a pullback, all right, and you got time on your side, then that is your bingo day, all right? But you've got to money manage and technically analyze what you're doing. Now, on top of that, what do I have? Swing day forecast. Now, the week of Sunday 23 to Sunday 23 to Saturday 29. All right. Now, see here, we start from a Sunday and go to Saturday. There's a good reason for it. Okay. Sunday to Saturday. Sunday to Saturday. If you took timing from me, you know why. If you haven't, don't worry about it. A week is from Sunday to Saturday. Primary cycle vector. All right. So these are grade A stuff. When's that happening? Thursday, 27th of November is already done. This is peaking at the 9th of January. All right. So we are on the 2nd of January. So that's going to be on the 9th of January. So we've got time for that. Not a problem. What else have I got? I've got another one happening. Peaking out when? Friday, 9 January. This 9th of January, we're going to have to keep an eye on. All right. You see things are peaking out. When things are peaking out, they need to freak you out. 9th of Jan. Here we've got another 9th of Jan. Look at these. These are all primary cycles peaking out. And it's a grade A. So 9th of Jan. All right. Okay. What else have I got here? These are 13th of Jan, 1, 2 Jan. So 1st, 2nd of Jan. Now this is important. Why? Because it already gave us 2nd of January there. And then I've got here 2nd of January. Whoops. Here, peaking out, it's grade A, and Thursday. So Thursday, Friday, probably a trade day, okay? And because it told me the 2nd of January, okay, I'm probably going to wait for that or dive in there, all right? But the 1st and the 2nd together, it's a Wednesday. How could that be a Wednesday and a Friday? No, it can't be. Sorry, it's Thursday, Friday. I'm looking at there. Thursday and Friday. All right, so keep that in mind. 1st of Jan. Do I have any other 1st of Jan, 2nd of Jan? Yeah, I've got here 2nd of Jan. I've got primary vectors, grade A. This 2nd of Jan, 1st of Jan, 1st of Jan. I like it. All right, so what are we going to do? We're going to mark in 1st and 2nd of Jan. That's your 1st of Jan. And that's your 2nd of Jan. And I like it. All right. Now look. When you make note of these days, what did I say? Make a look, take a look out for when these things are peaking out. Look, on January 9, it didn't start on the 1st or the 2nd, but something is peaking out on the 9th, on the 9th, on the 9th. Something is happening on the 9th, and they are all grade A. So if I enter Jan 1 or 2, I better be looking out for Jan 9, because at that day, and look, on the 10th as well, I've got 3 days on the 10th here. So the 9th and the 10th, Friday and Saturday, I better look out if I'm going to be trading on the 1st or the 2nd of Jan. Does that make sense? So I go into the market 1st, 2nd of Jan, 3rd, 4th, 5th, 6th, 7th, 8th, 9. Look at that. 9 is again a pullback to go up. So something is happening. All right. We went up. Now look at the beauty of it. Look at the beauty. 1st, 2nd. Peaking out on the 10th here. Right. 1st, 2nd. Market goes up. Comes back into the 9, 10. What do you see here in the cycle? It's a short-term cycle. History repeating itself. History repeating itself. History repeating itself. That's cycles. All right? So a lot of people say you can't measure cycles. You don't know when the market's going up and down. I just don't listen to anybody. Only believe what you see. All right? Now, why is this also good for us? Look. The market from here is chucking a Yui. If you know how to chuck a Yui, right? If you learn how to chuck a Yui from me, you guys know how to chuck a Yui. Once you chuck your Yui, Where are you coming back to? Whoops. You're coming back to a goodbye kiss. And when's that happening? Oh, it's happening on a swing day. All right, you see what I mean? We bring one and one together and you see how practical it is. Let's do something even more crazy. Let's check out the hours. Now this is, whoa, let's put these there. All right, see how the market is. Swing day, support, breaking out. Pullback, goodbye kiss, trade day. Push to the upside. Now let's check out the hours. What are the hours for January 1 and 2? This is January 1. Grade A hours, 9 a.m. This is January 1. Did I say January 1 first? All right, let's do January 1, 9 a.m., 9 a.m., and 9:45. January 1. Where's 9 a.m.? Guys, this is 9 a.m. right here. All right, and then we've got 9 p.m. I guess that's there. And bingo, bingo. Now remember the first and the second, right? So first is also a good cycle day because it's been popping up. How do I know it's a good day? Because it's popping up. Whoops. Okay, the more it's popping up, the more it's like popping up, you know, Mary Poppins kind of stuff. So you want to pop it. And then I've got 2nd of Jan. What do I have for 2nd of Jan? What are the hours? A good hour, I've got 3 a.m. Okay, 3 a.m. midnight, 10 past midnight, let's say, and 3 a.m. Grade B, grade A. So 3 a.m. is looking hot. 3 a.m. This is 3 a.m. And this is midnight. This is midnight. 5 past midnight is on that bar. Market going up. 3 a.m. a bit of a pullback. Doesn't make a low. And goes up. All right. You can chuck a U on a 15-minute chart too. No dramas. Let's move forward. So once I know, right, remember I've read the weekly insight. So what I'm doing now is just following through. All right. Now you also know technical analysis. So you're not mucking around. Once you start to go up, where are you going to take some profit or manage the trade? Well, you're going to take some profit and manage the trade right there, aren't you? Okay, and this is where the tops were. See the retracement coming back. So you want to take profit there. You don't want to be looking at it. Right? Once you take profit there, that is it. Your week is done. This is the following week. Right? So you're already in the good books. Why? January 1. What was that? Sunday? Thursday. All right, so that's your Thursday, Friday, Saturday, Sunday, Monday, Tuesday, Wednesday, Thursday, Friday. So the following Friday and Saturday. All right. So once you've taken your profit, that's it. You call it a day. All right. And then you're back in action on that day. Why? Because you made note of it, right? From the weekly. Okay. And then let's go to the weekly. Let's go to the new week, right? Here we are. From Sunday to the next. Look at this. Tuesday, 6th of Jan. Structural and it's volatile. And it's an apex. The 6th and the 7th. So let's take a look at the 6th and the 7th. That's your 6 and that's your 7. Market selling off. Beautiful. Now, these are things you want to know in advance. Right? Whoops. Come on, mate. Okay, never mind. All right, so at the end of the day, 6 and 7. Market coming down. And it's apex. All right, so they're like strong coming down. Let's take a look. 6, 7. What is it telling us? Let's read the insight. We don't want to be just mucking around with it. Peak 13 way, 69.2 back tested hit rate. It's not bad. Meaningful pivot probability if confirmed by price action. 5 trend window signals active. Multi-day directional context in play. Watch this session open for directional commitment. Pivot probability is real but not guaranteed. Okay, because nothing is guaranteed. What time? Grade A, it's at 5:11. So let's call that 5:15. When? 6th of January at 5:15. 6th of Jan. Let's go to the 6th of Jan. Sixth of Jan, 5:15. That's your 5:15 there. All right, market makes a slight high, but it's down again. Do I have any other hour? No, that's it. 5:15 on that day. Now, one slide. Remember, this is auto-calculated hours, so there's no manual work done by me. But in your members area, you're going to see a bunch of hours. Why is that? Because I'm still doing some manual work, okay? Because, you know, they can't calculate everything. So I have to check certain conditions. I'll see if that condition and that condition and that condition and so on. All right, so some things still require manual work and effort. So there will be more hours. On your cycle edge report, you might have 1 hour. Okay, like on this one, it says, look, from 3 to 8 o'clock. That's the zone. There's no specific hour, all right, but this is the zone. So from 3 a.m. my time to this is from what, 3 to this is a 24-hour block. Why? It's from 7 to 8 of Jan. So that's a 24-hour block. All right. So let's see what it says. High tension day peak, 14 ways. Suggests a structural pivot setup. All right. Back test 84.6 historical hit rate at this density. 4 trend window signals active, multi-day direction context in play. Build position sizing around this date. Confirm with session open price action. All right, fair enough. So the 7th of Jan, let's take a look. No time for this, remember? Okay, no time at all. But 7th of Jan is here and it is just going down. Let's take a look on the daily. 7th of Jan. That's your 7th. All right, nice and easy. Now it says here, look, there's a note to take here, right? It says multi-day directional context in play. So this is going to be more than 1 day. That is on January 6th. And on the 7th as well, it's telling me the same thing. You know, it says, this is a few days in play, all right? So, you know, you can follow through. Now, if I don't have hours on January 7, you're going to have it here. Because I'm doing manuals, and when I do manuals, there will be more than 1 hour, all right? So you have to check this as well. Okay, it's just additional information, and the hours here used with your report here can actually be a bingo. All right, it'll just guide you. So these are all additional bits of information. January 8th, structural active day, peak 11, 69.2 back tested hit rate. 1 intraday trade hour window flag. This is a single shift moment. So that multi-day directional context here it's no longer existing, right? So it's like, you know, if you're going to follow this thing, all right, yeah, be mindful, okay, because now we're in 1 intraday trade hour window, okay, and those could be at these hours, all right, so fair enough. So I'm coming to June 8. This is your June 8. right? See June. Let's do this. This is your June 8, you see? So let's take a look at June 8 and see what hours were in play. June 8. Let's just say 4, 5:30, 6:15, 8:15. June 8. 4 o'clock. 4 o'clock. 5:15. What else did we have? Forgot. 5:15, 20, same thing. 6:15, 8:15. So 6:15. That is 6:15. And then we've got 8:15 down here. And then, oh sorry, that's 6:15. 8:15 is in the evening. 8:15 is in the evening. Whoops. Right at the top, guys. Okay, there we go. So this just gave us a downward signal. Okay, if you wanted to follow the trend, yes, great. Okay, where would you have gotten out? At the goodbye kiss. You have to get out the goodbye kiss because that's your zone. All right, remember we're doing technical analysis. So the market got there. Okay, let's check the big black book. If I had anything for January on that day, what was that? 8th of January. So I would have entered this manually on the 8th of January, right? Thursday. What have I got here? I've got 650. So that's pretty much 615. 650 is here. So we're pretty close. And then I've got 10 past 1, which is not a strong level. 10 past 1. This is 10 past 1. Again, look, the market. You see how the market is always going down at the hours, going down, 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 down. And then I've got the 521 and the 845. Okay, so 521 is the logical adjustment level. If I use the word logical and adjustment, you know what I'm talking about, and that's 520, and that's there. All right, and that's it. So that's your up bar. That's your stop loss, because you don't want to be like putting too much stop there. You're either going to be underneath there. If you're intraday trading, it's a 1 bar stop loss. You should go up. If you're going to swing it, then obviously your stop loss is going to be below that window. Why? Because that is already a day where we are expecting structural volatility. Okay, structurally active day. Now what happens? Now remember, the 9th of January we took into account from the weekly. 9th of Jan. All right, look at that. 10, 10, 10, 9, 9. So the 9th of January, 10th of January is like, okay, I've got to look out for that date. So what is happening on that date? Well, after the market does its goodbye kiss, this is your 9, this is your 10. It's chucking a Yui. You can use a U-turn strategy, which I taught you right here. It's nice and easy. It's just nice and easy. Now then, what I have to look out for? Well, after the 9th, you see how you're following this all the time, right? If the 9th of January is important, 10th is important, what's the next move? So I want to be checking out when anything that starts on the 8th or 9th, because we're at the low, or the 10th, is peaking out. That's peaking out 12.13. That's peaking out, that's the 10th of Jan, on the 24th. So I have to keep my mind open for things that can happen on the 12th or the 13th. And I want to see if 12th and the 13th are popping up anywhere else. I've got a 15 that's popping up. Other than that, no. 12, 13, and 15, 16. All right, so that's where I have to follow it to. 15, 16, 17, 18. You might say there are a lot of dates there. Listen, mate, if you entered your trade here, right, then you start following it until the earliest. And that's your 15th right there. And then the market is chucking a U. Now look, 15, 16, 17, 18. The market is only crashing afterwards. Why? Because that time period there, 15, 16, 17, those 3 days you saw there, 15, 16, 17, right? They're all grade A. These have peaked out. So whatever started on the 2nd and 3rd of January here, they've peaked out. It's like, okay, this cycle is now a done deal. Once it's a done deal, then we can expect the reversal because it's over. It's ended. It's bye-bye. Okay, I hope that makes sense. So every week, right, I'm going to post this. It's going to be like a picture on there. There are going to be hours, right, as usual on the daily, right? It says grade A, grade B, grade C fair, but you must keep your eyes open on anything I add there, all right, in the weekly market timing. Okay. Now, the possible vector day, energy day, I'm not sure if I want to keep adding this into the members area, right? Because if you're all going to see this, then, you know, you got comments. All right. And sometimes too much information is mind-boggling. And we don't want to be confusing anyone. All right. But this is just like, you know, it's good to see it's nice and clean. All right. So Saturday, 10th of January, 6:30, 7:30. Bullish recovery at 7:30. Let's take a look. January 10. January 10. What can I expect here? Look, this is a 54.1% hit rate, okay? So it's the lowest probability we have. Suitable for intraday scalping triggers, not swing entries. Aspect peak window 4, active today, no separate regime shift hours. Use the aspect peak times as execution triggers. All right, so our peak hours are here. All right, if something is going to happen on the 10th of Jan, all right, it's going to be here. Because it's not a major thing, what are we going to do if it's not a major thing? We're going to follow through from a major thing, right? It's still on the cards. It's peaking out, as you can see, and I've got hours for this when it's peaking out. So I'm thinking to myself, well, this is peaking out at 6:30, 12:12. Okay, there's a reason for these hours here. So fair enough. What I will do is put 6:34, 12:12. $6:34, 12:12, 12:12. Let's just extend a little bit. Okay. Up, down, all right? Not the best of trading days, it's a sideways market. But it's telling you that anyway. It's saying, listen, Saturday the 10th, standard timing, low probability, it's only 54.1% hit rate, suitable for intraday scalping triggers only. Okay, so it's not great. The reason we can trade on this day is because we've got a good base coming from the previous days, right? So by doing this, you're just following the market all the time. You're just following. And if you do it, see how you're following every twist and turn? Boom, boom. So, it just makes sense, okay? Then going up, what to 15th and 15th, look, 15, 16, 17, okay. This is like looking like it's going to sell. And then there's the breakdown. Once it breaks down, it's like game over, right? So you keep measuring your days and hours on whatever asset you're trading. If you want to trade more than one, fine. But remember, the more assets you're looking at, the more dramatic your life is going to be, because you can't trade all that stuff at the same time. So, but what you can see here is you can see notable days where you can trade rather than mucking around all the time. Once you find a good location, then, obviously you can follow that through, especially if you know technical analysis and if you know where you're going to go to, all right, you can already see what the market is doing, all right? And once it starts to fall off, that's it. It's a trade day. It's turning around. Once it breaks, that's your goodbye kiss. Look, this is how it should be from bottom to bottom. All right? So that is how it is. Let me just double check here. Yeah. So it's that one. Bottom, bottom. Whoops. Top. And that's it. Once the market breaks down, that's your goodbye kiss. We probably have a day there as well. So let's take a look. So what do we have here? 15, 16, 17. All right. Now what comes afterwards? So we want to get to the other Sunday, right? And the following Sunday is going to be January 11 to 17. 11 to 17 is there. All right. So Sunday we're going to start at 11. 17 is Saturday. I've got the weekly summary. I'm doing the same stuff. All right. Weekly summary. I'm looking at the weekly summary, figuring out my days. Okay. You'll see some of these things are bold, right? And then I'm looking at the date period here, 11 to 17. What's happening on 11 to 17? Right? Is there anything happening on the 11th and 17th for us? Well, nothing on the 11th, but I do have 10 here. So what does that tell me? If I see a bunch of 10s here, right, that's a sign something has peaked out. So on the 11th and onwards, we can start looking for a reversal. Let's see, I've got 16, 15, 16, 17, in fact 18 here, right? So that thing peaked out on the 10th, okay? And we'll see how things pan out across the week. I've got another 17 there. I've got 15, 15. So this 15 is looking hot. Because they're ending. And when something ends, something must begin. And here we've got 14, 15, 16, as you can see here, right? So after 11, we can check the grade A's, okay? So on the 13th, these are grade B. 14, I've got grey days, as you can see here, right? 2 grey days on the 14th, 1 on the 15th, and 2 on the 16th. And I've got a grey day on Monday the 12th. So by checking out what happened, because this is from 11th onwards, I can just wait. I can say to myself, okay, we're going to wait. What are we going to wait for? Well, we're going to wait for the 12th, 13, 14, 15, 16. But you're thinking to myself, I'm thinking to myself, that's like every day of the week. Okay, so on every day of the week, am I going to expect a swing? No. But if I've got a bunch of days stacked up, that's a special week. All right. And that special week, when something is about to start, it should give me a drive, right? So that week, I have to figure out how I'm going to turn around. Okay, because they're all stacked up. And look what's happening here. Once they start up, 12, 13, 14, 15, 16, right? These days, look where they're going. 21st, 21st, 19, 18, 24, 24. All right. 17, that's not another one. 20. All right. So you see that 19, 20, 21. So those 19, 20, 21 dates, okay, they're stacking up. So now I'm thinking, well, how far can we follow these down? That's your, oh, beautiful. 18, 19, crash. 20, crash. Into your 21, which turns out to be a blue day. Now look, it started on the 12th, peaked on the 21st. This is your 12th here. See how the market is back exactly there. Nice, huh? It made a move from the 12th, comes back peaking at the same price, and then we have a crash down on what day? 28. Let's check out when 28 is. Look at that 28, same place, you see? That bar, and that bar, they are all, look, that's 11, that's the, when is the 9th? That's the 9th, yeah? It was the 9th or the 10th. You see how they're all on the same spot? It's interesting, isn't it? And then the market just goes down. You know what that is? That's a goodbye kiss. It's bye-bye. Do I have a special day there? 28th of Jan. Let's see if 28th of Jan. 28, 28. I've got two 28s there. What is it? It's the period ending. I've got another 28 there. Grade A, grade B. Grade A, grade B. So 28 I need to look out for. 29 I need to look out for. Why? Because it's 28, 29. Anything else for the 28? No. Oh yes. Here we've got a grade A. And then 28, 29. A bunch of 28s and 29s. Those cycles are ending. What's going to happen? We're going to do a chicka chicka bye bye right here. All right? And that's how it is. So this is how you use it. Okay? Just looking it up. All right? As we use it more and more, right, it'll settle in. Now, why am I doing this video as well? Because we're going to start putting stuff in. When I say stuff, in trades in, right? So what I'll be doing is looking at Bitcoin and gold and euro dollar, just those three, okay? And I'm going to trade them so I can collect data as well, so we can be like running them, right? You know, trading them. And that I'm going to do with the 5-step protocol, right? So once you get your protocol running, up and running, we'll be able to log it. Logging is important because if you log it, then we can go back to see how our stats are actually, you know, playing out with the back tests that we did and the live results that the system is giving us. Okay, so then I can kind of match my trading. But you see how with your technical analysis, if you just connect the dots, it really is just connecting the dots, then it's going to pan out. It's really interesting way to trade. This is why if you took technical analysis from me, you remember we use 5 types of technical analysis. You will see that every time you use those 5 types of technical analysis, when that swing day matches that style, it's the hour you go in. More often than not, it's going to be a bingo day. This is why it reduces anxiety. You're not chasing the market. You're just preparing for what's going to happen, and you know what's going to happen in advance. Okay, so make sure you use your checklist, the protocol. Make sure you use the cycles edge. I'm going to put those assets into the members area, right? And then once I put them in, you'll be able to see them week by week. I'm just going to take a screenshot and put the week in, all right? And just combine it with any hours I give. Okay, I already gave everything until the end of June. You see, in the forward projections, you can see those, right? And that's basically it. It should be just a matter of following through. Obviously, use proper money management, right? Because you could be, you could make a wrong assumption, and then you don't want to be putting a dent in your account. But you can see you can take, it's going to like really reduce your risk when you're using time and price together. Just put your technical analysis together and just do it. You see when the market is going to turn. It tells you these days, they're the times when the market's going to turn. The hours. If you're going to buy, and if at the hour the market is down at an intraday trade price level, then that's it. It's your time and your price. Go for it. If you're going to swing trade for a few days, obviously your stop loss is going to be a bit more further out. But you already know, according to the days ahead, when you're going to manage the trade, because it's giving you all the swings along the way. All right, so that's that, guys. It's been about 52 minutes, nearly an hour's video. But if you're in the members area, really these are, and if you're serious about your trading, right, this is how you need to put it together. So today I'm going to be like putting it together, right? So Sunday I'm going to be looking at the documents, and I'm going to be thinking to myself, okay, next week I got Bitcoin, gold, euro, dollar. I've got to like boom, boom, boom. These are the days I need to look out for. These are the hours on that day I need to look out for. Okay, so now let's do some technical analysis. Where does the market need to be for me to go long? Right? So that's how you bring it together, and you can see how it's practical. It just takes a lot of the guessing out. It'll increase your hit rate, accordingly your profitability, reduces risk, reduces anxiety. It's like the perfect tool. Have a good week already, and we'll touch base in the daily videos, right? In the daily videos, I'll do some updates, and I can also add, when I do stuff, I'll add a video link in the comments or in the members area like I used to do before. All right, for a while I haven't done anything because I've been working on not just this software but on 3 softwares, all right, for timing and pricing. All right, have a good day, have a good week, all the best.